Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, September the 15th. The year's 2022. Let's talk trading. Trading is all about you, part 11 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, we just had a news event.
Yeah, what a news event it was because the market's confused right now. It doesn't know what to do because when you look at it, the news was all over the place. It was some positive things for the U.S. and there's some negative things for the U.S. and it's just like the market's like stuck in this range now of 10, 15 pips, I guess it is. And they put in some on the 1 minute chart. Let me go and look at this. Actually, it's about a 22 pip range, but it put in a bunch of nice little return bars. And it's funny because except for the very last one, it's filled all these return bars. So I think that this last one probably is not going to get filled. It's probably probably going to run up. I may be wrong. I have no idea. But the thing is, it just shows you that those return bars are so successful. And you were talking about one of your rules with return bars, Tiara. Why don't you explain your rule with that?
Well, first, for those who might not know what a return bar is. What I call a return bar is a bar that is bigger than average, and since I have percentiles, usually if it's somewhere around the 80 percentile or higher, it's a return bar. But I ran frequency distribution, and I just found out that on M5 and M8, if you have a range, a body range open to close of 7 or more, or an overall range of 8 or more, that's usually a return bar, which means price is going to return to the open of that bar. So back here on the news event about 8 bars ago, we had a 13.2 pip bar, and then you see it came back to that open price, and then we had another return bar here. Oh, what was that? About 8. Let's see. What is this bar? This bar here is 10. That's 3 pips. So I guess it was this one that was 13 pips. Right
Yeah,
here.
one is 11, and the other one seems to be about 16.
Yeah, well, this one's 13, and the one before it was 16. But right here, this what you can see. There's the open, and what did price do? Price returned to it. So chances are price might get back down here. Don't know for sure because we just popped out of the lower wick zone here. Now we're heading back in at the 91.5 level. So if you look at a daily chart, you can see this is prices just exiting that lower wick zone.
Right.
So
Yeah,
anyway, the
it's
thing about return bars you wanted me to explain. Um, let's see, on the M5 chart, um, what I noticed is usually if you have a return bar, don't go looking for a reversal on the next bar. What you want to look for is for the next bar to go about 50% more than the first bar. So if this bar is 10 pips, look for this bar to have a range about 5 pips. And then you can start to look for that reversal. And that's just something that
yep.
through observation, it's kind of a rule of thumb. I violated that rule this morning, put me into some drawdown for a while. I just dig my way out of it. And you're laughing.
Well, I am laughing because I was there watching the misery. But you got out of it, and that's the most important thing. You got out of it. But you're right. The thing is, I talk about all the time, trading plan and following your trading plan. And the reality is, we put those rules in place for our own protection, and when we go and violate it, well, I hate to say it. I mean, I'm going to come across pretty callous here, but yeah, you go and violate your own rules. First of all, you're violating it at your own peril. That's the first thing. The second thing is you violate it and you get burned. Well, whose fault is it? Bringing it back to our topic of view, whose fault is it? Is it the market's fault? Is it the broker's fault? Is it your method's fault? It's none of those. There's only one person that can be blamed for it, and it's YOU.
Yeah.
I know I'm kind of being a little brutal here, but that's just the reality. You know, when you were in that trade, you know, and if you don't mind, I'm just going to go and talk about what I said to you at the time. It's like,
yeah.
Okay, you're in the trade, you went and averaged in to help yourself out, which was a good idea, and then, you know, it's that thing. I think you had to get to 1493 or 1492 to get out, and it was right before news. And I said, just move your TP there and let the market do what the market's going to do and get you out. Okay, and you said to me, "What, sir?"
I don't remember.
You recall what you said? You said to me, "I want 94 or more."
No, I said I want 96.
96, that's right.
And where? Like, and tell the boys and girls and non-binary traders where price went to.
Oh, it went exactly there. But the problem with that, see, my trading plan is different than the way you trade. Okay, with my trading plan, that would have been a mistake to hold out for that because I'm going into a news event. News can do anything, and sort of like my number one rule is preserve capital at all costs, even if I take a small loss. You know, and that's just that's just how I trade, and you know, but that's not you don't do that as much as I do it. You kind of trade it a little bit differently than I do, you know. But for me, that would have been a total violation. Even if I made money, I would have been mad at myself because I didn't follow my rules, you know. And that's just how that's how I look at things. I don't get mad at myself when I lose. I get mad at myself when I don't go and trade the rules. And the thing is, the reason why is because over time, if I'm not following the rules, what's eventually going to happen, I'll win here and I'll win there. But over time, I'm going to lose money. It's just, I've proven it, you know. I've proved it for a bunch of years, you know, that's where you lose money. Don't violate your rules. Just don't do it, you know. And you're going to go into a news event, I want to be as flat as possible, you know, and sometimes it's not possible, but man, do whatever you can just to try to get flat.
Right. Well, looks like we're trying to take out this
video. I said I didn't think that return bar, that last one, was going to get, you know, taken out right away, and I was right about that because look at where price is now.
Yeah.
We're now all the way up to 1510.
Yeah, we hit that other return bar. It's 1510 on your broker. I got 15.8 on my screen.
Yeah, I got to 1510. I'm not there anymore. I'm at 1507 now.
I got the 9.1.
Yeah, difference of brokers, you know. But, you know, but the thing is, you know, yeah, I called that out, but that's not a reason for a trade. That's just the observation, and, you know, and that's not part of my trading plan. Therefore, I don't trade that, you know, and you have to go in, you know, trade what you're going to do, because again, at that point, you know, I like what you said. You said at one point in time, you know, hope is not a trading plan or something along those lines. You know? And,
hope is not a trading. I think that's one of those Linda Ratsky or Mark Douglas sayings. Hope is not a trading plan. But anyway, I just put the frequency distribution up just to show the traders here. Let's see, but this was for something else. I got to go in and change something else just so they can see. 6, 7, 8, 9, 10. So you can see here, if on M5 high minus low, which is the range, if it gets above 7, that's only going to happen about 1/3 of the time. Okay, so in other words, about 3 times out of 10, you're going to have a range that big. So when it starts to do that, you look at these, you know, at 8 is what's the number I like to use, because that's 28%, so that's just a little over 1 out of 4 times. And so I like to call those return bars. And in fact, here, TRO 28 13 return, and if I put in an 8 there, go back here, you can see it's just put in 3 return bars in a row.
Yeah.
And the thing is, if it takes out a return bar, it'll take it off the screen. But this was a return bar right here, but we just took it out, so that's over with.
Right. So, but again, getting back to our topic here of the reality is everything that we do is, it's all on us. And we have to go and recognize that and trade that way and trade with that perspective, and don't be delusional, because doing anything else is delusional. I know I'm sorry, but I'm being brutal today, but it's just, I had to be brutal to myself to get profitable. So if it helps anybody out there by being brutal, I'll be brutal, because I'd rather see you. I'd rather have you have hurt feelings and making money than being, living in a candy coated world and losing money.
Right, for sure. That's definite.
But getting back to the news, I had said this earlier, but the news was pretty all over the place, and not quite sure what our Fed is going to do in the next 2 weeks, because that news, the news has been pretty bad. But the news today was one of those things where there was some positive things there. The unemployment claims that came in were actually not nearly as bad as what they were expecting to be. Actually, they were pretty good. There were, there were some really good points in the economic news. Now, I know that some people say, well, those numbers are just made up anyway. Well, maybe they are, maybe they're not. But the thing is, the markets and the people who make decisions what they're going to do with interest rates, they use those numbers. So even if they're made up, they still use them.
Right.
And so I don't know how that's going to go and drive our, what we should look for. Obviously so far, people are saying, okay, when I go and take all the news, put it all together, and put it in a bag and shake it up, it's a little bit more negative for the U.S. currency. So people are probably thinking that they're not going to raise the interest rates as much as they originally, because yesterday or the day before yesterday, all the talking heads were saying that the Fed was going to be forced to go and not move the interest rate 75 basis points, but actually move it 100 basis points or maybe even 125 basis points, which would have been reconciling. We've never moved it 125 basis points in one meeting. So, that's kind of what I think drove the market down to the 1,400 level, because people are saying, oh boy, here's an opportunity for us to make lots of money on interest, and so, but I don't know, like I said, I don't know what's going to happen. And, but this obviously was a mixed bag of things, and maybe this is going to go and bring us back up to the 1,600 level, which is probably a more reasonable level where it should really be. But, because let's face it, the economy's no better in Britain than it is here.
Right.
And the reality is, Britain last week went and left their interest rates the same, but if the British economy doesn't improve pretty soon, it's what's going to happen is that they're going to have to raise their interest rates as well.
Yes, they will.
And probably the reason why they didn't raise their interest rates, and this is just conjecture, but probably the reason they didn't raise their interest rates was just because they had the new prime minister, sworn in the week before that. And so that's probably what drove that to occur. In other words, let that person get their feet wet before you go and slam them with the reality of what they just walked into.
Right.
So we're just kind of meandering here. I think we're starting to put in maybe a little bit of a top. I don't know.
Yeah, and guess what? We're out of time. The fastest 15 minutes in trading. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.